right, we're gonna do some Stan Weinstein stage analysis for Intel Corporation, and that is ticker INTC on the Nasdaq. Sector technology, industry, semiconductors. And I always start my top to bottom approach, establish a trend on the monthly candle chart. Look at that, man. That nice base. What happened here? Oh, see a false breakout here. Here it had the final breakout right here. Man, frameworks overlap. What you see on the monthly, any trading framework, and then after that, Stan used the swing rule, guys. So if you could have a system overlapping. Oh. Same targets. Almost laser accuracy. Look at that. Top to bottom. Breakout. Enter here. Sell stop here. Target here, and then you forget. And look at that. Look at the precision. Boom, just got it. And see that over and over. And it's kind of cool that if this was a stage 2 breakout, I don't know, Stan maybe would have entered lower here if we zoom in on the weekly. And that target really got you out there fast. Stan on the weekly probably got out around here. Trendline violation. Let's go check it out. Where is the move? Right here. So would we have been able to enter with Stan? Here's the base. Oh, look at that crazy volume candle right here. But we're not outperforming the SPX yet, so we would have not entered. Not yet. This one here. This candle here. There might have been a move here. A start from this candle. Crescendo volume going up. This one's the one that seals the deal. 4 times more than twice the average of the previous 4 weeks. Going upwards, up above the zero line compared to the SPX. That's our baseline. Top 500 companies from the Nasdaq and New York Stock Exchange. And we would have put our sell stops. Pull back, price action went back up. So I could see the lull here. Here's would have been our sell stop. Traders way, investors under here. I have a 4-point trend line. No. 1, 2. Stan, remember he wanted 3 points, and a violation on the 4th would be considered a break. Then you take off half your position. Not quite right. You would have been exited here if you would have been a trader, so you would have not ridden all the way to the top. You would have moved to here, and that's it, guys. After that, if you would have entered, see, because it's monthly, right? Larger time. Targets a little further, but Stan, you had continuation breakouts. So if ever you were triggered out because the sell stop was breached, then you'd wait for a horizontal breakout line, getting close to the 30-week average. You look for double the volume, the previous 4 or 5 weeks, and then get a chance to get in again. But you got to remember also, the best breakouts are not the embryonic ones, but the second or third. And after that, continuation breakouts that are too far ahead in a move, then they have less chance of yielding those profits than the ones that you got in earlier. So I'm not sure we would have been able to re-enter there, and here would have been the exit on that. All right, let's go back to the monthly. And here we are today. Wow, man. That was a tangent. I have the close. Well, no, not yet, but let's wait to see the August candle. If it's going to close below the 12-month moving average, you don't want to be there. If that happens, I think now it's probably going to look like a stage 3, maybe stage 4 on the weekly. And I'm wondering if there's a top pattern. Here's where I have it, man. It went up so fast. I always look for a red candle close. So a red candle close tells me that the monthly close defining support right there, because it decided it had a wick below. Price action went above, and that's a close. So when I don't know if I don't have a low yet or a close here, I draw my line here. So I'm maybe imagining maybe a bounce here, go back up. But after that, that means you're going to start having price action and under the 12-month moving average. It's going to start going like that. Maybe. All right. Weekly. What are we dealing with, guys? Okay. Definite. Oh. Definite stage 3. Remember, if you're below 30 moving average, you're out. And right now, look at that demand field indicator. We're in red territory. Let me get the arrow. That means when it's highlighted red, it means the 30 moving average is declining. Price action is closed below the 3 moving average, and you're underperforming the SPX. All we need now is to get out of the cloud, Ichimoku cloud. And after that, if ever I have a close below it, and you see my monthly defined breakdown line, where we are right now, it's going to seem to coincide pretty much with that area. So I like it when there's synergy, when you see a monthly candle close coincide with or very close to a weekly close, defined breakout or breakdown, and then Ichimoku cloud, I give it a better value. Because if we would have had a horizontal breakdown line here, Stan, remember he says, always make sure you don't have close overhead or under support. Well, that's the clouds helping us for us to define that. I could have had a breakdown here, but the 30 moving average is still going upwards. You still have some support here of the cloud. Not ideal. Remember, you always try to look for reasons not to enter a trade. And for me, a close below that 44 level on the monthly candle at the end of the month, I think we're golden, guys, for a short. But until then, there's a few weeks left. Price action, like I said, might pull back up here, go back down. Who knows? But keep an eye on it. Intel really slowing down, stage 3. The only thing is the NASDAQ it's part of NASDAQ, which is doing pretty good. Its sector is technology, and I believe that's doing also pretty good. Yeah, still in stage 2. And it's part of the industry, semiconductors, and that one's not the best. I don't know what's the weight of. Let's compare it to. Okay, we're gonna do this. Stage 4 looks pretty much like Intel, right? So stage 3. And if I ever get a breakdown, get a close below, that's stage 4. Underperforming the SPX, not good. Declining. This is a start of a stage 4, guys. Okay, let's go back to Nike. And what we're going to do is we're going to compare it to its peers. Intel, sorry. intc, Intel Corp. We're going to compare it to its peers. So in its industry, semiconductors, industry, and we'll see if it's underperforming. And it is. Move that arrow. Could keep it there. Same thing. It's underperforming its peers. It's the beginning of stage 4 against its peers, guys. So Intel's seems to be the weaker one of the, maybe not the weakest, but part of the weaker ones of the industry. Its sector. Compare it to its sector. And yeah, same thing going down. So it's a good candidate to short if you're going to decide to go against the NASDAQ. The only thing I don't like is the NASDAQ strong stage 2, sectors still strong stage 2, but the industry is weak, and Intel seems to be one of the weaker ones in its industry, going down along with it. All right, there you have it, guys. So halfway territory, stage 3, some signs that it could break down. Just keep an eye on it. You shouldn't be in the stock. If you are, well, I would wait for a stage 2 continuation breakout or stage 4. But right now we're angling more for stage 4, guys. We're really close to that. Thanks, guys. See ya. Ciao.